Hey traders, John Howell here, your number one market trader. Just want to give you guys an update, obviously, on the stock market today, but also I want to talk to you something about that the yield curve is signaling right now, and about the coming recession in the stock market. I also want to talk about why savers will not be losers in the future, and our kids that are growing up right now are also going to have a really good opportunity that it's probably going to go back to where you could save a lot of money and that money could earn you good interest. So I'm going to talk to you about why I believe that's coming as well. And then I want to talk to you about the triple C, and that is the crypto capitulation coming. Let's get straight into it. Don't place a trade based on what you're seeing in this video, because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, let's get straight into it. Traders, I'm giving away access to a free trading course. The second link in the description, if you click on that more button in the description and click on that, there's a second link there. I'm giving you free access to my breakthrough trading course that I normally charge $500 for, but I'm giving you away free access to that. Very second link in the description, guys. Click on that and you'll be able to get that access to that. So let's talk about the actual stock market today. So the stock market today, we can see that we're still stuck in this overall sort of triangle pattern through here, where we're still at this bit of a do or die situation where we are right now. And so if we have a look at this, can I bring that up through there? Is it going to allow me to there? Okay, cool. So software's not working today. All right, alrighty, there you go, software. How about that? You start the record and the software says no, I am not well. So this is the Nasdaq as well too. You can see Nasdaq's right on the support line as well too. We do have a bit of a trend line coming down through here, so we're still stuck in this overall. We are coming down quite a fair bit through here. So it's really interesting that I'm noticing through there, and also the S&P. We are continuing down, so it does look like this is the weekly chart we're looking at. Go back to the daily chart. It does look like that we could quite possibly start to see, and is that? Yeah, that is recording. All right, okay, cool. So we are starting to see this thing start to move down towards this level through here. We are getting pretty far away from the 52 moving average. So I wouldn't, if we do get a bit more downside, I wouldn't be too surprised to get a bit of a pullback through here, and on a short-term level, because you can see that it doesn't get too far away. As soon as we get too far away from the moving average, too far away on either up or down, then we start to get a bit overbought, oversold. So I wouldn't be too surprised to get a little bit of a pullback coming out of this here. We've just been straight up, straight down. So if the way that I look at the markets is that whenever I'm looking at the markets, I like to use the analogy of a boxing match, and that is that if we have a strong move up, who is very strong through here? Who is very clearly strong through here? The buyers, right? They're buying it up. So, but there's two sides to a boxing match, right? You got the buyers one side, and you got the sellers one side. But if the sellers come in and the sellers start to do something like this, and they're just barely hanging on, if this was a scorecard out of a boxing match, who would be winning out of that boxing match? So this is the scorecard for the buyers, and this is the scorecard for the sellers. The scorecard would probably say maybe 8 points to the buyers and maybe 3 points to the sellers, right? Because we had a strong move up, but we didn't have a strong move down. So we had a strong move up through here, and so therefore that says this overall pattern says that there's a lot of buyers within this market here, right? So that always gives me that gives me a good gauge on who's in control of the markets. One thing I do say is that when the market starts to do this and then this, guess what? It's the buyers and sellers are fighting it out, right? We had strong buyers, we had strong sellers. And that's what we're getting right now. The buyers and sellers are fighting it out. Who's in control? What's going to happen through here? So that's what I'm looking at through there. If I go and share with you the yield curve, look at this here. So this is the yield curve. If you go to gurufocus.com, you'll be able to get this yield curve. And you can see the spread which is basically the differences between the 10 and the 1 year, you can see every time we've actually got below, which is a negative, below this red line since 1990, which is like, what's that, 10, 20, 30 years. In the last 30 years, every time this went negative, a recession happened, right? But look at this here. So it happened, but look what happens first. So we go negative. See how we go negative through here? But then suddenly, is that when the recession happens? No, it's when we get back above and we go back up through here. Then we what? Then we're into the recession, right? Then that's when the recession comes in. Same thing through here. We go negative, negative. As we get back above, that's when we go into recession. Negative, negative, negative. As we go back above, we go into the recession. Negative, negative. We actually went negative, came back up into the recession. Now we're negative, negative, right? So what's probably likely to happen through here? We're probably, for some reason, it's going to probably tighten. It's probably going to come back up to here. So it's not, it's not in a negative territory. The spread's there on the curve. And then we're probably going to go through, then we're probably going to have the recession coming through here. So we're definitely on our way to a recession, but and the seeds have sown, but we're not there yet. And the same thing for here. This is the 10 and 2 year for the spreads. And you can see the same thing through here. We went negative. So this is negative in 1989. 1989, 2 years later, we went into 1990. We went into recession. It went negative through here, which is in 2000, right? And then guess what? 2001, we were in the recession. We went negative through here, which was 2006. And then we went into recession through there. We didn't go negative here, but we did go negative here. So a lot of people are saying that the stock market can't go up from here, right? Because they're raising interest rates. As you can see through here, that we know 2006, 2007, was not the top in the stock market, right? It was, especially when we started to get through this point through here. So we still could get a bit of a rally out of the actual stock market by looking at that. So the next thing I wanted to talk about is why I believe the savers will be our kids, right? Our kids that are growing up right now, especially like my kids, in the next 20, 30 years as they're growing up, I believe we're going to go back to the old days where savers will not be losers. I believe we're going to go see that. See, so many people like Robert Kiyosaki, and I'm not having a go at him for what he teaches. It's all about savers are losers, right? And cash is trash and so on and so forth. That is true right now. But I believe over the next 10 and 20 years, that's going to shift again to where we're going to start to see a really good interest rate happening within banks, and so we can go put money in an account and get 5 or 6% return. And the reason why I say that is if I look at the big long-term interest rates here, I see things completely changing. If I look at the weekly chart, this is the 30-year. Look at this here. We've been in a massive down through here, a massive downward movement on the interest rates, right? Because as you can see, cheaper rates, which also means savers will be losers. But I believe we're shifting from a major bottoming pattern, and then we're probably going to get pullbacks through here, but the overall over the next 10, 20, 30 years, we're probably going to start to see interest rates go back up again, where savers won't be losers, right? And even the 10-year, you can see, look at this here, look what happened with the 10-year. The 10-year has completely started to change. This is the first time in history it started to change. Lower high, all lower highs through here, as you can see. Lower highs all the way down, lower high. We had a slide higher. Then we came down, the final capitulation, and now we're starting to see an upward movement after going through this sideways. We may continue up a little bit more, right? We may continue up a little bit more, and then we get a bit of a pullback out of this here for some reason. Maybe the inflation rate goes down or something like that. I don't know. But overall, the big picture is what I'm seeing on the big picture is that we're probably going to start to see something like that again. And And the whole thing about that is that, once again, that my kids are going to go back to the old days, right? To where, you know, back in the 80s, as you know, we had high interest rates. So therefore, you know, savers were not losers, right? You still could get a really, I remember when I was growing up, was it ING, 5% interest rate per year, right? So I believe we're going to see that coming within the markets there. Leave a comment below and let me know what you think about that as well too. Now, I want to talk about this through here. I know some of you guys are still holding on to cryptos, hoping for that next boom to come. And all I do say is that the market is always talking to us. Okay. And so if the market is clearly in a downtrend, don't fight the markets. Okay. Have you seen Rogue Trader? Rogue Trader, leave a comment below. Have you seen the movie Rogue Trader? Right. And then there's a time where I think they're at a lunch break, right? And you got Nick Leeson and his mate on the floor, and his mate said, "Mate, don't fight the market. Don't fight the market." Right? Because the market was tanking, right? Tanking. And he just kept doing these massively like option strategies. I think he was doing spreads or something. I don't know. Maybe I think it was just maybe riding naked options, to counterbalance the actual the book itself. So, but don't fight the market, right? If the market is clearly in a downward trend, look at this here: down, up, lower, high, down, up, lower, high. We still could possibly end up down here to maybe 10, maybe even a bit lower if we start to really. We may even head back down to here, maybe 4. I definitely have a target of 10,000 on Bitcoin. All right. So I know I have one of my private clients right now that I just found out that he's been holding, and he's like, "Oh, I hope we don't get another movement down." You sticking your head in the sand is not going to help. You can ignore reality, but you can't ignore the consequences of ignoring reality. And like if you've watched my video in the last couple of days, I talked about I did the exact same thing when Trump was being elected. I totally threw out everything the market was telling me, and I just found any reason why I was right. Or, you know what I mean? Like I started looking for confirmation bias, which was a big mistake for me. Confirmation bias, you know, and then now I look at this through here, and I look at something like Neo, right, or Cardano as well too. Like I look at these things here, and say for example Cardano. If Cardano breaks past $14 in a big way, like a big large bar, right, then we could actually see a very sharp movement on the downside of around about 80%, and very quickly too. Right? Because that's what the market, that's what's doing, right? The calm before the storm, right? Now, I'm not saying that's definitely going to happen, but if we do get a very sharp breakaway bar, guess what I'm going to be doing? I'm going to be shorting the shit out of it, right? So, and again, I've just made this mistake so many times. So if you are holding on the cryptos, hoping and praying and saying to yourself, I cannot take any more. I cannot take this anymore. Or I hope we don't get a drop, right? It's like, but then I guarantee you what you're doing is that you're looking at YouTube videos and looking at everything, the reason why this is the bottom and this is going to rally up. And you're looking for confirmation bias. Instead of you looking at the reality of what it really is doing right now, right? And what we've actually talked about here, which is clearly massive down. Like this thing, if this thing breaks down, guys, get ready for capitulation. This thing is about to get absolutely destroyed. So capitulation is coming. So the whole thing about this is that if you are in a state where you're looking for confirmation bias, the confirmation should be the market itself, right? So anyway, traders, leave a comment below. Let me know what you think is going to happen with the crypto market. Do you think we're at the bottom right now, or do you think we're going to keep going down? My little predictions. But we need to see a breakdown first. Is that we're going to see at least a $10,000 print on the good old Bitcoin. Traders, I want to invite you to my webinar that I'm running today. And on this webinar, I'm going to share with you all the details to my #1 trading system for the last 17 years and how I only trade 1 hour per day. Plus, also going to be learning the 3 secrets that I had to master over the last 17 years to generate a really good income. If you go to johnsfreetraining.com, or there should be a link in the description, click on that, go over there right now, register. If you are struggling with the trading right now, I promise you this is going to completely game change, because you're going to understand why you are going backwards and why you're losing money. And then I'm going to teach you exactly what the system I use that gets me a really high % win-loss ratio. So this is what I want you to do right now. Go to johnsfreetraining.com. Go over there, register for my webinar right now today, because you're going to absolutely love it. Or there should be a link in the description. And I look forward to seeing you on the webinar. So go to that right now, and I look forward to seeing you on my next webinar. Go to that right now. Go to johnsfreetraining.com. Go to that right now.